Hello, traders. Gary Wagner with the Gold Forecast. As we say in Honolulu, Hawaii, happy Aloha Friday. It is Friday, of course, September the 3rd, going into Labor Day weekend here on the mainland. And this is the Daily Report, our weekend review. Forex Gold currently trading at 1246.57, under a little bit of pressure as we go in towards close, about an hour left of trading. We are seeing some continued profit taking. Of course, we saw a major round of profit taking the market below 1240. On today's report, we're going to be covering the weekend review, the interpretation, at least for the gold market, in terms of the U.S. unemployment or jobs report that came out today, our interim view and long-term view, all on today's weekend review. Traders, I have put our COMEX December contract of gold here up on the left, and of course, right next to it, our Forex contract. As you can see on COMEX Gold, currently trading 1248.50. And again, 1246.57 on the Forex contract. In terms of fundamental news today, the U.S. jobs report did come out, and the anticipation was that we would lose approximately 121,000 jobs in the month of August. Now, although the unemployment rate did rise to 9.6, only 54,000 jobs were lost, which was a lot less than originally anticipated. As you can see, traders, I've gone ahead and put up a weekly chart here up on the left and our daily Forex chart on the right. Now, in terms of the straight market moves that we've witnessed over the last 5 weeks, that's these 5 candles, we have had significantly higher closes as compared to the open. Of course, on a weekly chart, the open is on Monday, the close is on Friday. We are still looking at a solid bullish trend on the weekly charts. When we go to the daily charts, however, we do get this hangman. Now, one candle does not make a market itself. And we have had many times in the gold market in recent activity where we've seen either a doji, a shooting star, another doji here. We had 3 dojis here in which the market was simply breathing, consolidating, gathering more energy before bursting to the upside, so that this one hangman, without some serious confirmation as we go into next week, and of course with Labor Day on Monday, we will have major markets closed, so I'm not expecting anything very significant over the weekend. But what we would need to see for this to issue a potential top would be as follows. We would obviously need to see what's called confirmation. Confirmation would be a black candle, of course, that meaning a lower close, and we would need to see the market begin to trade lower, something like this. Without this confirmation right in here, though, this market could genuinely just be issuing some kind of a breathing room. However, whenever we see dojis, hangmen, shooting stars, in other words, either a doji or the umbrella lines, it is something we want to take note on. But we also have to pay serious credence to the fact that with this kind of a runaway bull market that we've had, we are getting many occasions where, as I said, there simply points to pause and gain steam before traveling higher. Traders, one area that I do want to take note of, and we've been talking about this over the last few days, is if we look at this top, and this is the top from our third wave. This is when we went to 1245, 1250 area on the high. I believe that that right now is an area that if we are to continue this rally in a sustained manner, we need to see it trade and, more importantly, close above this critical 1250 area. Now, as you can see, yesterday it did in fact do that. It did trade above that, but currently it is trading below it, and I believe will close below it for the weekend. I wanted to spend a moment today on the weekend review and talk to you about my long-term view of the market. I think that right now we're absolutely in an unprecedented bull run. When we take a look at the angle and slope and the price appreciation of gold since even October of 2008, you see that we have seen a move from $700 well above $1,200. Obviously, we need to take out this high at 1265. That being said, I believe that our real target right now is 1300, and I believe that over the next, say, 3 to 6 months, that's achievable. I believe that as long as our economies do not get their fiscal house in order and continue to print more money than we take in and artificially prop up our economy, gold has nowhere to go but up over the next 2 to 3 years. It's a longer term view, but I believe that $1,400 to $1,500 gold is not out of the realm of possibilities, and the probabilities, I believe, are rather high. Traders, we have seen this market move $100 over the last 4 to 5 weeks. We've seen an extremely significant move in the market. I am quite surprised that we have seen this market move without any sort of a real set of profit taking. We've had points in which the market would breathe. We've had small retracements and times when it would trade sideways for a while only to break out to the upside and to create new highs, as we've seen in these occasions. We are now looking at a scenario in which we do have this hangman. As I said before, it is only significant if we see follow through, and we would need to see follow through, of course, played out at the beginning of this week. So what's our strategy? My personal sentiment is when we take a look at where this market originally moved, and if we take a look at, for example, wave number 1, which started this move at 1040, it was about a $100 move. Right now, we have that same move in the marketplace on this particular wave. We have another $100 move. In other words, from approximately 1155, 1160 area to about 1150, 55. So we've seen roughly a $90 move in the marketplace to a $100 move in the marketplace, so that we have seen a very, very significant move. I am going to look to see if there's any signs of a basic retracement and an end to this wave 1 next week. I believe that if we see a retracement, the typical retracement area that we would look at would be about 38%. That would be fairly logical for this type of a move. If that were to happen, and these are rough lines, we would be looking at, in terms of a 38% move, to move us right to this point here. And that would be about the 1217 area. First, we have to see the market, of course, show us some sort of confirmation. And as I've spoke about, that would be a series of candles that began to trade with lower lows and lower highs. Of course, they would have to be also black candles, meaning that they opened and then closed lower. If we were to see that, I do believe we could witness some sort of a retracement in this area. As for the fact that we are trading in an area and it has not been able to break above and on a closing basis take out those previous highs. However, this is a runaway bull market, and if need be, we will look to buy the breakout if it can form a significant base above this target area, which is the top of that third wave, form a base on a closing basis and trade higher. I can tell you this, we are at a most interesting point in gold. We will have to see where the market itself trades over next week, and from there get an indication of our strategy. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you next week after the Labor Day holidays. Bye-bye.